our responsibility is to make sure that our borrowers can afford their facilities, especially in this interest rate increasing environment. And so we will ask the extra question.
Welcome to the Bailiwick Express podcast. My name is Matthew Leach. I'll be joined each week by a guest for a series of podcasts. Each will shine a light on topics from across the Bailiwick. The format will change week to week. We'll have debates, reviews, hot seat interviews and special guests. So stick with us as we offer some insight on some of the most important issues we in the Bailiwick face. The Bank of England has increased interest rates yet again, and it is having a substantial impact on Guernsey's mortgage market. While the situation is only getting better for those already with property, the first-time buyers are facing consistently increasing house prices. We spoke to Head of Lending at Butterfield Bank, Ed Jones, to find out how people should be preparing for mortgages and how they can best get on the property ladder. So, welcome, Ed. How are you doing today?
Thank you, Matt. Very good indeed, thank you. The sun's out and we're in a blessed position on that basis.
We are. This seems to be wonderful at the moment. We brought you in today not to talk about the sun, but to talk about mortgages and interest rates and Butterfield, which is where you're at. Just quickly tell us what your role is.
Certainly. I'm responsible for the lending department of Butterfield Bank across Guernsey and Jersey. Okay,
and so of course we've noticed recently that interest rates are rising. The Bank of England seems to be raising them. Last week was, I think, the most recent one.
It was indeed.
What does this mean for mortgage customers and what kind of rises are we seeing?
So, mortgage customers, the rates have gone up to 1.25, and that's been a steady increase over the last year's period, going from 0.1 at this stage last year. This will affect mortgage rates, and mortgage lenders have started increasing their rates. Not precisely in line with the Bank of England increase, but there's certainly been a direction northbound on that basis.
And in what way have they been increasing their rates? Are they to the point where people can still afford them? Are they still coming forward? I mean, how healthy is the mortgage market here?
Yeah, the mortgage market is still very healthy. We've seen through the States of Guernsey Bulletin and through general publications, property rises have unquestionably carried on. And that has been akin to the UK and to Jersey. And this rise is to try and combat that inflationary pressure. Mortgages, we still absolutely make sure are affordable to all lenders. And there is still very much a marketplace where the majority of homeowners still require mortgage facilities. Lenders have to make sure that's affordable for the local market.
And how do they do that?
So us at Butterfield, we have got a debt service ratio. We don't work upon salary multiples. So we ascertain people's income, expenditure, assets, liabilities, and work out what they can afford. We don't want to provide facilities to islanders that they can't afford. We want to make it achievable, and we want to make sure our borrowers manage their finances in a strong fashion.
It's interesting that you brought that up because lenders in Guernsey and elsewhere seem to be increasing their multiples of annual salary on what they can lend on. It seems a bit of like a dangerous trend. I mean, is this a sensible trend? And what are the issues with people kind of maxing out their mortgage?
I can't really talk about the other lenders and how they handle their salary multiples. But as I said, from our perspective, we ask the extra questions to understand our borrowers, understand what they can afford, because we don't want to put, as I said, borrowers into a position that they can't afford their facility, and we see that as responsible to the island and to the market as well.
And we'll come on to the States of Guernsey figures for Q1, but Butterfield itself as a lender, what kind of trends and stats are you seeing? Are you seeing lots of people coming forward still for mortgages? Has it changed over the last few years? Are people asking different questions?
Yeah, absolutely. And you've referred to the inflation and property prices. We see a lot of people looking to refinance, to release equity, to maximise value in their existing property, to reduce the cost of changing from one property to another. So we're getting a lot of those questions. We're also getting a lot of questions of fixed rates. We've seen the market increase, and people are looking for longer term fixes so they can really budget what they can afford for the mid to long term.
So, if we talk about briefly just then, but not properly. Obviously, you say you look at the property bulletins in Guernsey, the statistics gathered by the states of Guernsey. What have you made of the most recent report of Q1 figures?
Well, we've seen the Q1 figures, and there has been a 4% increase from the last quarter. Now, that is akin, as I said, to both Jersey and the UK, and that's really why the Bank of England are increasing those rates to try and reduce that inflation. From a local perspective, it affects the first-time buyers and people who can afford. Obviously, there is a benefit to the people who own existing property, but it's making sure there is an equilibrium across the island.
And what kind of particularly stuck out to you within the figures that was either a surprise, or is it kind of what you expect at the moment?
I think it kind of what I expect at the moment and what we see. And I think it's down to the island, and we're blessed to have a lot of local people providing mortgages, providing valuations, providing estate agency work, and so therefore that really understand that market. We don't want to see an overinflated market, and I believe that this has been a general trend and equivalent to what we've seen in other comparable areas.
So these average house prices now, I think they raised by 14% in a year. How do mortgage providers adapt to that? And I guess you're talking about a certain level of responsibility you have to not allow it to get out of hand.
Indeed. And we take responsibility towards our borrowers as paramount to how we lend. It's really important that we understand the property. We question the valuations. We question, does this borrower in the long term, can they afford the facility, and is the house suitable to their lifestyle accordingly? So we do ask the extra questions, but we feel that that is very much a responsible angle to take towards the local market that we operate in.
So just to turn back to that, if not a multiple of annual salary, what kind of things do you look at? Because I think that's quite interesting and quite unusual for a mortgage lender.
Yeah, absolutely, and we feel that's slightly different, but it's really important, and that local people ourselves providing local products to the local market. And we are looking at income, we're looking at expenditure, we're looking at their assets and their liabilities. So what do they own? What are their debt positions? And I think it's really important, and a message that I want to get out there is that borrowers think about their budget and think about their spending patterns. And there is going to be more expensive debt, mortgages, and their home, and everybody's home is normally the most important asset, important and most largest expense that they undertake. So when looking at mortgages, think, even if you don't need one for another year's time, think about your expenditure. Plan ahead. Borrowers will be thinking, can they afford the facility? Don't spend all your money thinking, I don't have a mortgage quite yet. Try and have a track history of saving. Try and show and develop that you can manage a mortgage product and keep money aside for that.
Well, that's good that you brought that up, because I was going to ask, are borrowers now facing different questions, different issues when they're coming to the table to be like, I would like a mortgage?
Of course, and many borrowers don't necessarily like the extra forms and the extra questions, but it's really important. And our responsibility is to make sure that our borrowers can afford their facilities, especially in this interest rate increasing environment. And so we will ask the extra question, but we make sure that we ask a precise question. All our team is highly educated in this area, and it's local people's understanding local employments, understanding local people's income stream, local expenditure, to make sure that it's a realistic picture, so we can ascertain the value or ascertain the facility size which would be appropriate for our borrowers.
So are more people coming I think you said this before, but just to go back to it real quick. So are more people coming forward and asking for fixed rates to add a bit of stability since, we've come through such a tumultuous time, I suppose?
Absolutely. That's the only questions we are being asked really is about fixed rates and also having releasing equity, as I mentioned earlier. And so it's such an important product. And even if you have got a fixed rate mortgage that is coming off in 1 year's time and you're concerned about your position in 1 year's time, ask your existing lender, what would it cost to break this? Would it make sense to actually enter into another term facility now? So therefore, and it's just managing that, speak to your lenders.
So you don't need to be stuck in where you're at the moment. There are opportunities to change.
There is unquestionably opportunities to change. And it's just understanding the facility you're in at the moment and making an educated view on what is out there at present to try and assist and alleviate any concerns you may have for the future.
Are you getting any questions about extending the lifetime of mortgages?
So extending the lifetime of mortgages, absolutely important. You then can potentially have a reduced amortisation, spend less money. And back to that debt service ratio, is understanding what people can afford. So we look at retirement age, generally 67 years old, and that is 67 to 70. But we ascertain each person's present financial position and determine whether that's possible at all.
Do you have anything else to add?
No, I've said this before, but I think it's really important to make sure that people understand their present financial situation, alleviate any concerns, and investigate. And please do not hesitate to contact us to help in that process. We'd be more than happy to speak to everybody in the Channel Islands.
Thank you for your time.
Thank you very much indeed, Matt.
Thank you for listening to the Bailiwick Express podcast. The title track was Shift My Weight by Luno. If you enjoyed it, I know it's a pain, but please like and share. It all helps. And remember, you can hit bailiwickexpress.com to stay right up to date with whatever is happening in the Bailiwick. You can find us online, on social, on email and on internet radio. There'll be more from me, Matthew Leach and all the Bailiwick Express team next Friday.